Phantom equity plan. Phantom equity plan. Incidentally, the SEBI regulations on share-based employee benefit and sweat equity regulations 2021, there is no mention of phantom equity plan, but these phantom equity and neither there is a mention about PEP in the Companies Act. But globally, phantom equity plan are used by the companies for motivating their employees, for improving the retention of the talent in their companies. Now, how does the phantom equity plan works? Let's understand. So similar to SARS, they are similar to SARS, but not actual shares are ever issued. So we discussed that in case of SARS, the SARS can be equity settled. The SARS invariably are cash settled, but sometimes they can also be equity settled. But in case of phantom, they are never equity settled. They are always settled in cash. So they are purely cash-based settlement plans. Let us understand with the help of an example. There's a company called MNO Limited. MNO Limited grants 1,000 phantom units to Miss Asha. So the company MNO Limited grants 1,000 phantom units to Miss Asha, linked with a share price of rupees 50. So at the time of grant. So this is the base price. And as I said earlier, the base price can be same as the current market price. So when the company is granting the phantom equity, so at the time of granting of the phantom equity, whatever may be the then current market price of the company, that becomes the base price of the company. Let's say the vesting period is of 3 years. So what happens after 3 years? The share price, which was 50 at the time of grant of the phantom equity, after 3 years it has become 120. So that means there is an appreciation of rupees 70. 120 minus 50. So there is an appreciation of rupees 70. The number of phantom units that have been granted to Miss Asha is 1,000. So what is her gain? Her gain is 70 rupees, that is appreciation per share of the company, and the number of phantom units granted to her, that is 1,000. So her gain is 70,000. So she is going to get cash 70,000 on the vesting of these phantom equity after 3 years. And how will they be taxed in her hands? Now this is a cash that Miss Asha is receiving in her hand. So it is going to be part of her salary. So this will be paid to her as a salary. And I'm sure you can notice in case of phantom equity plan, even though it mentions equity, but really speaking, there is no equity given in case of the phantom equity plan, and therefore it has a distinct advantage of no equity dilution. So the employees are only given cash, they are not given equity. As a result of that, there is no dilution of equity in case of phantom equity plan. So in case if there is any question from anyone, please go ahead, and else we will go to the last of the options.